Hello and welcome. You're tuned into CNBC TV18 Prime. Let's get cracking on a brand new edition of The Big C from CNBC TV18 Prime Ionic Wealth Studio. I'm Anisha Gupta, back with your daily dose of commodities, crypto and currencies. Before we head to our guests, let's take stock of the action in the global markets, and the stocks on Wall Street staged a recovery. Fueled by tech stocks, the Dow gained nearly 185 points, while the S&P 500 ended a fourth of percent higher. The tech-heavy Nasdaq also gained nearly 140 points in the day. Meanwhile, Asian Pacific markets traded mixed. Back home, the Dalal Street is seeing lower trading session. Meanwhile, it is the crude oil prices which are also trading lower as traders monitor the geopolitical developments in Venezuela and Ukraine and their potential impact on the oil supplies. And then it's about the money market front. The Indian rupee has breached that 90 rupees to a dollar mark. The currency sees the most depreciation among the Asian peers and is down by nearly 5.5% to 6% for the year now. Ole Hansen is head of commodities strategy at Saxo Bank and joins us on the show now. Ole, hi, thank you so much for joining in. How are you looking at the currency markets, first of all? We do understand that rupee, Indian rupee, that is the worst performer in Asian markets. It has quite on its own problems as well. How are you looking at dollar index, and if you're looking at Asian currencies at all?
Well, I should be looking at Asian currencies, Manisha. Obviously, it's the growth engine of the world. But what we're seeing recently in the dollar is really a bit of a tug of war. The dollar has tried to have a comeback in the last few months, mostly because it was really quite oversold and underappreciated by investors around the world. But this recently we've seen some renewed weakness starting to creep in. But it's not only the dollar, but elsewhere in the world we have problems as well, here in Europe as well. So it's really, I think ultimately what will dictate the direction of the dollar in the short term is really what happens against the yen. The yen is a key focus simply because we are seeing a normalization of rates. We're seeing long-end rates moving higher to levels we haven't seen for almost decades, and that is raising some concerns that the yen could be in for a sharp appreciation, and that could obviously add to the next leg in terms of dollar weakness. So overall, with interest rates coming down in the US probably already next week and more next year, the weaker dollar potentially should underpin and support some of the other currencies, including the Asian ones.
All, it's an 89% probability that we are looking at a rate cut for the month of December, but there also is that perhaps a 10-11% probability of not happening. If that turns true, what are the markets looking at?
Well, then that would definitely be a surprise, of course. But I think also the Federal Reserve is kind of a little bit in limbo right now because we're getting a new Federal Reserve chair next year, and with the market basically calling for a rate cut, I think there's no reason why they shouldn't deliver it. So I would be very surprised if they did not do it. But obviously the market has been pricing in this cut. So if that doesn't materialize, we could see some sharp movements and corrections across markets.
Well, absolutely. The first half of December promises to be very, very volatile. Second half, as always, of course, is a holiday season then. But silver then, and that clearly has been a headline in this year, this week for sure, 12% of gains onto that when we are still holding $58 an ounce. How are you looking at silver? I mean, I understand there are a lot of macro things and a deficit as well, but a 12% gain and only in silver, I mean, there has to be more than what meets the eye. Would you call it more of a speculative move, really?
Oh, it's a combination of many things, but the speculative part is most certainly very relevant here because we did take out that 54.50 level on Friday, which was a double top, and that a break of that forced many short-term short sellers to reverse their positions. But then there's also, I would say, silver is prone to quite a few conspiracy theories, and that probably fuels the fire with investors getting involved, which may not necessarily know the silver market that well. But I think looking at the number, what is clear is the market is tightening up. It has been tight for a while. The supply is struggling to meet demand. And with the recent data we've seen out of China, where they've been shipping silver towards the West and towards India as well, I believe, and with the tariff risk hanging over the market in the US next year, that is basically just helping stranding silver in stateside, which will tighten the rest of the world. It's the same thing we're seeing in basically underpinning copper and platinum prices as well. So the rally is quite extreme, I would say, at this point in time. I think we've been talking on many occasions throughout the year, and you know my view on silver, that it is potentially performing better than gold, but in the kind of fashion we're seeing right now is not really something I had envisaged. So we're approaching $60. The ratio against gold is below 73. That's a key target today, because that was providing support since 2022. Could potentially signal some more silver outperformance in the short term. But I think we need gold support as well, and gold is really looking a bit tired here, struggling a bit. We're heading towards year end. We're up more than 50%, so some profit taking is emerging here. So I think for silver to move on here, we really need gold, and today's U.S. economic data and the Fed decision next week potentially could be the driver for that.
Ole, what are your targets then for silver prices? Where do you see silver before we end this year, and what is your sense for overall next year as well?
Well, for next year, I maintain my view that gold could still have another go to the upside, simply because the reasons why we're up 50%, none of these reasons have really gone away. So that will continue to fuel the market. Still concerns about stick inflation, fiscal debt situation in the U.S., some of the multiple geopolitical hotspots that doesn't really seem to be improving. So with gold going to 5,000 and with silver heading towards a ratio near the 70 level, then we are basically looking at silver somewhere in the 70s. And if we should see the gold-silver ratio revisit the low from 2021, we're even looking at 80. So it is quite a phenomenal recovery we're seeing in silver this year.
Oh, absolutely. But Ole, would you see the 70 and 80 without a correction at all? And if there is a correction coming in, which would give more buyers entry into this space, then what is the downside that we're looking at into this?
Well, we just went through a 15% correction back in October. That is really not unusual when it comes to silver. As we all know, it's a high beta gold, or gold on steroids, or whatever you like to call it. It tends to correct quite violent, even though sometimes when the underlying fundamentals are quite supportive. So yes, that we most certainly can't rule that out. In the short term, that 54.50 area that was the previous high really needs to hold. If that is taken out, then potentially we could see another 10% correction below that back down to 50. So if silver is doing what it does, investors just need to have ice in their stomach, because the volatility is not going to go away. It's probably going to increase even further with these very lofty levels.
Well, it's been an interesting year when it comes to metals. We have an all-time high in gold, we have an all-time high in silver and copper, and multi-year highs in platinum, palladium, and various other base metals as well. But copper clearly catches an eye, because we're trading near those all-time highs with an expectation that $12,000 a ton is not too far away. What is it that Saxo Bank is looking at in sense of price moves and targets here?
It really all depends on whether we're going to see the tariffs next year. Again, the underlying fundamental story for copper is one that is positive. The electrification of the world, the demand for data centers, and the AI craziness we're seeing right now is underpinning prices. But on top of that, we're seeing this risk of tariffs in the US basically hoovering the global market for copper. We have inventory monitored, or exchange monitored inventories. Now 60% of that is held in the US, which is a market that accounts for around 5% of global demand. So we've seen I would say, an artificial tightening of the market in recent weeks. And it's also worth pointing out that earlier this week, when we did hit a record high in copper, that was on the same day we had reasonably weak economic data out of China, which used to be the engine behind the copper market. So it highlights that we're facing a new situation here, where there are other drivers, and one that is not as dependent on China as it was in the past. So with that in mind, copper is on, I think will be moving higher. We need to see higher prices still, in order really for mining companies to get the incentive to continue to expand production, which is needed in the coming years. So it's been a year where China economic worries has not had any negative impact on prices, and that just tells us there's a different and a bigger story brewing, and that is the electrification.
So what would you look at as price targets for 2026 and 27 if you believe that there is going to be a shortage and concerns about supply going forward?
I don't see a silver type movement because obviously there's the potential for a lot of scrap to come back into the market if we reach levels that warrant that. So we're not solely dependent on supply from mining companies. So with that in mind, a 15% a 15 to 20% increase from here is probably a reasonable target. And then obviously if we do run into a tariff situation and we get another squeeze, then obviously anything can happen. But let's call it a 15 to 20% move higher next year.
And are you expecting that kind of an up move for other metals as well? Or do you think copper and perhaps zinc and then aluminum could really continue to run up the way copper is expected?
Aluminium is part of the same story, and these are really the two metals that's been the main driver behind the index, the industrial metal index rally we've seen this year. So we expect that to continue. A lot of focus, I would say, also obviously on the Ukraine-Russia peace negotiations. It seems like we're not really getting anywhere right now, but there could be supplies unleashed from Russia if we do get a peaceful solution, and that goes for other metals as well and other commodities in general. But it just seems like that the chance of that is fairly slim, even though they're still discussing an agreement.
Well, absolutely. There's a spillover of most of the concerns that we've seen in 2025 into 2026 as well. So that takes us to a very volatile year, but a buying absolutely in gold and silver and copper. And of course, trade tariffs is something that we'll keep an eye on as well. Ole, as always, thank you so much for joining in and making sense of what really needs to be watched in the international markets there when it comes to commodities. But with that, we'll slip into a short break. On the other side, we'll be joined by Urszula. She's partner King & Wood Millicent. Stay tuned for that conversation on cryptos on the other side. Welcome back. Joining us on Big C now is Urszula McCormack. She's partner King & Wood Millicent. Urszula, hi. Thank you so much for joining in. And if October and November and now December is anything to go by, and the kind of sell-off that we've seen, not just in spot, but in leverage positions as well within the crypto space, what and how are you reading it?
Great to join you today. We've certainly seen a significant level of market activity, haven't we, in the last few months? And I think the real question at the moment is whether or not this is a sustained period, what is commonly referred to as a crypto winter, or whether this is really just part of the usual trajectory of what is a very volatile asset. Being Bitcoin and a reasonably volatile asset class in the broader crypto space. We've seen rebound today to some extent across the sector, but no doubt there is a loss of some level of the very, very high levels of confidence that we saw earlier in the year.
Urszula, would you say that the market perhaps should get used to this now? Because in the last many years, this is exactly what we've seen crypto do. The only thing different this time is that we've seen a more retail and even more institutional interest coming in. With that kind of money now involved within crypto, how have you seen the macros impact the space as well? Because every sell-off that we have seen has been across asset classes.
Yeah, look, it's an excellent question because, as you say, we saw this last year in August. We saw it back in 2021. This is the story of Bitcoin. It's the story of many crypto assets. And so it is true that we need to be really mindful that this is the normal for several assets in this sector, particularly where those assets have a very special type of confidence, a special type of underlying set of fundamentals that are very different to your traditional assets. You're right also that we're facing into this in a very different context. So we are very far from the dawn of Bitcoin when it was a few enthusiasts. We're far from the heights of the 2017 and 18 ICO bubble, where again, it was still fairly niche. We have now not only sort of institutional acquisitions of these assets as reserves, we have governments that have holdings of Bitcoin and other assets. We have ETFs, in which ordinary investors participate. We also have ordinary investors holding shares in companies that have crypto as part of their treasury. But what I would say against that backdrop is that we have a fundamentally different legal and regulatory framework that supports the relative safety or the relative sort of parameters to accommodate that volatility. And what I mean by that is that we now have courts that will recognize crypto as property. That's very important, and will provide remedies when things go wrong. We also have a very significantly different regulatory architecture around the world in relation to the protections that investors can expect. We did have in prior crashes the real issue that sometimes exchanges didn't really hold the assets that people expected them to hold. They were rehypothecated, they were used for other purposes. A lot of regulation has made that a very different proposition now. So while we still have to face into the volatility of the asset class, we do have a very, very different legal and regulatory framework around all that.
Oh, absolutely. Urszula, also, what is your outlook for 2026 now? Because institutional adoption or the government framework that we still are awaiting from various geographies. And then it also has been about the real world tokenization, a lot of newer innovations that we also have seen within Web3 and blockchain. How would 2026 look to you?
Yeah, great question. So first of all, theme number one will be that we will see more conduct regulation emerge around the world. So most markets have now in place regulations to deal with AML requirements, so to deal with financial crime risks. And so that is largely in place thanks to the efforts of the international standard setter and governments around the world. So that's in place. But the real area that needs focus for a number of markets is that compliance framework, so that the measures that I mentioned earlier, the protections that are in place, the specific rules for things like exchange traded products really are in place. And I think that will be a very dominant theme going into the next year, that markets that don't have that yet will really need to lean into, not doing it to legitimize the environment, but really to make sure that their guardrails are clear. The second theme I would say in relation to this space is that we will see the tokenization trend continue. But I would say that the hype cycle that we really saw gain momentum this year might well be tempered looking into next year. We really saw a frenzy in a number of key markets. We saw it in Hong Kong and in Singapore with genuine wonderful innovation, but I think it will this we might say a sort of market correction or a market attenuation has given everybody some pause to take a closer look and to think about where those risks might lay.
Oh, yes. So there's lots to watch out as we go ahead in 2026. And if this year is anything to go by, we could only perhaps build on where we have been for this year. Urszula, as always, thank you so much for joining in. Appreciate your time. And thank you for talking to us about on what's really happened in 2025 and expectations in 26. But with that, that's all the time that we have on this edition of Big C. Thank you for watching.